In the midst of a barrage of profit downgrades, the big construction and development firm Lease has upgraded its forecast and on Friday revealed that it's got the funding now for the first two towers of the big three-tower Barangaroo project in Sydney. Not a bad effort, given that it's heavily involved in the sluggish residential property business here, and a big part of its business is in Europe, including being the biggest project manager in Spain. I spoke to Lease CEO Steve McCann about Barangaroo, as well as interest rates and the global economy. Well, Steve McCann, on Friday you announced that you raised $2 billion for the Barangaroo project. Does that indicate that the funding markets in the world are beginning to open up?
Well, Alan, it's very good news, obviously, from a Lease perspective, to be able to come out and announce the funding for the first two towers at Barangaroo. It is something we've been working on for quite some time, so the partners that we have in that fund, CPP or Canada Pension Plan, Australian Prime Property Commercial Fund, and Telstra Super and First State Super, alongside Lease, are all partners we've been talking to for some time. So I'm not sure that it of itself indicates the market's loosening up, but it certainly indicates the quality of the product that we have brought to them.
And what are the chances, do you think, that you'll end up building a casino on that site?
Well, we do have the right to build a hotel on the site, and as you'd be aware, we are currently discussing with the government the relocation of that hotel from where it was going to be out on the water onto the land, and we're in discussions with a number of operators. Crown's obviously come out and expressed interest in being able to establish some gaming facilities there. If the hotel can accommodate that and the government goes in that direction, then clearly if Crown's the best proposition, then we'll consider that. But we are talking to a number of players at the moment.
But if Crown did get a licence, would that mean that they'd automatically win the hotel operation contract?
Well, I wouldn't say it's automatic, and my understanding is it's some time before a second licence can be issued. But having said that, quite clearly, if you look at Crown's facilities elsewhere in Australia and overseas, they're very high quality. We're looking for a very high quality hotel, and if the opportunity to get a gaming licence puts them in a strong commercial position, which is what you'd expect, then I've no doubt that'd be a competitive proposition.
I mean, building such a big project on the outskirts of Sydney does seem to be a big vote of confidence in the Sydney economy, at least, if not Australia. But how do you feel? Are you confident about the economy and the outlook in Australia?
Look, we're confident of our own position, Alan. We've got a very strong backlog. We've got about a $20 billion urban regeneration backlog across our portfolio. We've got about $13 billion in land subdivision backlog and about $16 billion in construction backlog. So our group's in a very strong, diversified position. The Australian economy is, we think it's challenging at the moment, and in particular in the construction and residential space there are some real challenges. But we're still in a better position than most economies around the world. So in the last few years, our focus very much has been on driving our portfolio back towards the home market.
And what do you think of the Reserve Bank's decision this week to leave rates on hold?
As a company that participates in the development and residential space, clearly we'd like to see some more interest rate reductions. That would be helpful.
But is that just special pleading? I mean, are you just saying that because you'd like it or because you think the economy really needs it?
Look, interest rates are only one consideration, obviously, in a home buyer's purchase decision. There's a number of other factors, and they alone can't change the market. But it's fair to say that we've had a pretty tough year in the residential market here. Our sales are well down on previous years. There was an encouraging set of statistics that came out last month, but we're still well down on previous years. So I think the market still needs a bit of help.
How much do you think interest rates should be cut by?
Oh, look, I think that's probably not the sort of question that I should speculate on, but another cut would help everybody. I think, though, that, Alan, the important message that I'd like to get across is that we've got a very diversified portfolio. Residential is one component of that. But really what we've been able to come out and do in the last few weeks, we've come up with a significant profit announcement on Monday. We announced our tenants for the first two towers on Barangaroo 2 weeks ago. We've now announced the funding. So we've been very firm that we're about building a backlog, getting planning, getting tenants, getting capital, and we've made a significant progress along that path of execution. Well,
in fact, there was a huge spike in housing approvals the other day. I mean, what do you think we should read into that?
Well, it was a big spike, but it does take a bit longer than that for an interest rate reduction to flow through to demand. And bear in mind, those numbers that came out were distorted because they were not single dwelling numbers that we're talking about. There's a spike primarily in the apartments space. So, but also if you look at it overall, I think the month before we were down as low as we've been for 3 years. So, it's come back off a fairly low base.
As you say, you've been focusing on the home market in recent times, but you're still doing a lot of work in Europe and the US as well as Asia. How do those economies look to you, and particularly Europe?
Yeah, we're about 75% now from the home market and 25% in total overseas. We've got a pretty strong position in London with a good backlog of projects, and we're pretty confident about the medium-term outlook in London residential. Can't really say the same for the rest of Europe. It's obviously still very difficult, but we don't have much of a presence outside of London now. We're well positioned in Asia, and the Asian economies are still performing well. And the US is patchy, so some of the bigger cities, New York, Chicago, for example, activity levels are quite strong. But in some of the smaller cities, it still seems to be a fair way away.
And does China look a bit riskier to you than it has done for a while?
Well, China's a tough market. We've been there for 20 years as a builder. We are looking at whether we can participate in some development and investment opportunities going forward. But you've got to find the right partners and you've got to be patient. And I think that it's a long-term game, China. So we're not too focused on the short-term volatility that we see, but we are very focused on trying to establish a bigger position there over time.
Thanks for joining us, Steve McCann.
Thank you, Alan.